Welcome to part 3 of this beginner's friendly Forex guide. By now, you have learned how the Forex market moves, you have explored key concepts like price action, supply and demand, and you have been exposed to real-world strategy frameworks. Now, it is time to prepare for the actual battlefield. This final part is all about making sure you are truly ready to step into the markets with confidence, not just hope. We will go over these 3 topics. The first one is about the practical tips for beginners that will keep you from making costly mistakes. The next part is on quick but powerful readiness checklist to see if you are really ready to trade live. And then finally, we are going to do the final thoughts to ground your mindset and guide you on this journey. Whether you are about to fund your first account or just want to double check your foundation, this part is your final preparation before the real game begins. Let's get straight into it. We begin with the tips for beginners. Number 1 tip is don't rush to live trading. Why is it important to hold on before you can start doing live trading? When you have found your strategy and you have tested it on your demo account, when you're doing demos, the results are going to be so impressive. But when you go to the live account, things are going to look different. It is not because the strategy you used on demo has changed when you've gone live, but it is because on live account there are so many other things that are attached to live account that are not there when you're doing your demo account. For instance, on your demo account, you are not putting any penny on the line. If price comes and takes you out, you'll just reset that demo account and you start over again. And it will not hurt you. You would say, anyway, I'm learning. I've known what would have not worked, or I've known what is not going to work. But when you go live, here is where you are putting your money on the line. So every little move scares you off. And this is where your emotions and psychologies are going to be tested. So before you do this, what should you do instead? Look for free pro-farm challenges that are offered out there. For example, there is a free prop farm challenge you can get with FTMO. So once you enroll to this free challenge, you are going to get used to the rules that govern the Forex trading. So this way, you will be able to learn how much you are not supposed to lose per day, your daily drawdown. And then when it comes to stop loss and take profit, you are going to see real spreads that are not there when you are doing demo. But when you are doing this free trial, it is called free trial challenge actually, they are going to expose you to discipline. Of course, you are going to blow some few accounts before this gets into your head, but that is okay. Once you blow that account, go back and revise what worked, what did not work, and refine your strategy until you get it right. Next is about mastering one strategy. There are 1,001 strategies out there. So it is up to you to choose a strategy that you want to resonate with. That strategy is what you are going to focus on. Every strategy has its own win rate. There is no strategy that is going to give you 100% win rate. For example, if today you used support and resistance, and tomorrow you want to use supply and demand, and the next day you want to use CRT, and then the next month you want to use the DRT, in the end, you will end up confusing yourself. So instead, look for a proper strategy like supply and demand, because that is the only strategy that makes money on the Forex industry. Prices will always move from demand area here to supply area. Once it gets to supply, then it will be mitigated, it will come down, it will find another demand zone around here, and then it will move up. It will find another either supply zone above here, it will tap into it and then drop down. It will find another demand down here, it will react to it and then go up. Where is it going to? It is just sweeping this liquidity, tapping into supply zone, retracing back to demand zone, and then continuing up. So the market just moves that way. Sweep of liquidity, tap into demand or supply zone, retrace back, continue like that. If this is the strategy you have chosen, then just stick to it. The only thing that I would want you to add is the entry criteria, whereby you are going to use smart money concept, SMC. So SMC will just come in to give you now the green light. It is time to pull a trigger. How do you do this? So for example, on the higher time frame, assuming we have demand on the higher time frame and price left here, it has retraced back. It has tapped into higher time frame demand zone. Higher time frame demand zone. Okay, so once it has tapped into this zone, now this is the time you switch to SMC to start looking for entry checklist. First of all, you would have used supply and demand to show you that this is the demand zone, and there are several checklists you need to do to validate a higher time frame POI. Not every zone is going to hold, of course. I have taught this on my previous videos, and I'm going to elaborate further after this video. There are things that you have to look for before you qualify the higher time frame point of interest. For instance, there must be liquidity sitting above here for this zone to be valid. So when the price has traveled back to this zone, it has swept this liquidity. We know very well the next level that this price is going to will be the internal liquidity. So the internal liquidity will be this swing, this swing, this swing. So it is up to you. If you are scared of holding these trades, you can just take your profit here. Bank it, you're home and dry. But if you can hold, then you can just take to this final internal take profit. Depending on the analysis. Don't just place their TP just because I said. You have to do your own analysis and understand why would I put my take profit here and not here and not here. But basically, these are the areas the market is going to tap into and retrace back. So if this area is strong, then it is going to move the price down depending on the time frame that you are trading. For example, if this was 1 hour demand and maybe there is a 4-hour demand down here, this 1 hour demand will push this price up a little bit to sweep this liquidity, and then this liquidity will give it fuel to come down, sweep the stop losses of these people, tap into the 4-hour demand zone, and then react from the 4-hour demand zone and rally up. You can make small profits here. It all depends with your analysis. When you were analyzing the market, what did you see that informed your decision? Don't just enter because you've seen a demand zone. Okay? All right. Number 3 is to avoid paid signals early on. What do I mean by this? You find people are printing dollars online. They are just pressing buy and sell. They are getting signals, I don't know from what premium sites. And you also want to make money as soon as possible. You join a premium signal group like the one I have, but I will not advise you to start paying for the signals before you get your house in order. Why this is key? If you are going to get this signal, they are going to tell you where to enter, where to put your stop loss, and where to put your take profit. But they are not going to tell you how to calculate your lot size. It will just tell you buy or sell, and then it will give you entry, stop loss, and take profit. Some people do tell you take profit 1, take profit 2, and take profit 3. So now you've gotten into this signal group. You have your money, you want to put it on the line, but you have no idea how to calculate lot size. So you're going just to enter buy, and then the lot size, you're going to enter any number that will accept, and that probably could be 70% or 50% of your account. And unfortunately, even this signal, sometimes they lose. Unfortunately, you've entered, the price has hovered around here, it has come down, hit your stop loss. The signal provider has given you another re-entry. For example, the bias has changed. Sometimes they do that. So maybe they are now going to sell from somewhere here. So they are telling you now, sell, stop loss, entry, and maybe take profit. So by this time, you're demoralized because you risked, 90% of your account. Whatever amount you have cannot even open this position. You're stuck, don't know what to do. Why? You rushed. Do not run before you can walk. So crawl slowly, then start walking. Walk faster. After now you see that you have the stamina to run, then now start running slowly, slowly, and then increase the speed. That is how you are going to make it. But if you skip these steps, you are going to lose a lot of money, and you're going to go back again to the drawing board to start now learning afresh. And then you'll say, I wish I knew. I wouldn't have lost all the amount of money I put online because I was not prepared for what I started doing. So Forex trading, once more, it is not very difficult. All you need is proper guidance and be disciplined above all. The next thing is about keeping your trading journal. Why do traders keep their trading journal? The trading journal will be there like a mirror. So if you caught maybe, let's say, 3 trades and 2 of them worked, 1 failed, you need to go back to your journal and interrogate the market. Ask yourself, okay, these 2 worked. What was it that made these trades to work that I need to emulate? This other one did not work. Did I do any mistakes? But if you check and find out that it did not work, yet you followed your trading strategy and checklist, yet it failed, there is nothing wrong with that. Just keep on doing what you do, because in the end, consistency is key. Don't start adjusting your entry checklist or your exit checklist just because you lost one. Okay? This way, you will retain consistency long term. Now we move to the next thing, which is focusing on protecting capital, not just profit. What do I mean by this? If, for instance, you have purchased that prop firm challenge, and let's say you're working with a 50K account, this is the total equity. But remember, prop firm, they have given you only 10% of this is what you are allowed to play with. The rest is just there to act like as a buffer to help you open big positions that otherwise 10% of this amount would not have opened. So you are told not to lose more than 5% per day. Okay? You have started trading. You've seen a setup. You enter a setup. Let's say it's a sell setup. This is supply. You've entered somewhere here and you want to take your market down here. Okay? When you entered this market at this point, you have seen the market before reaching to your take profit. It has found some support around here. Okay? And due to these retail traders, this price is starting to move against you once more. It is your work as a trader to assess the situation, the current situation. If you see this trade may not hold in the long run, what you do, you bring your stop loss to break even and you safeguard your money. Take the risk off the table. Let the market hit you at break even. This way, you are not going to violate these rules. The drawdown you're going to have is 0% because you brought your stop loss to break even because you asset the market. It is not always winning. For example, you say, no, this trade got here. I was up, I don't know, 2.5%. And it is now coming back. I will hold. Once it will get back to 2%, I am going to close this trade and call it a day. You might hold and this trade will come, sweep your stop loss, do whatever it wants to do here, and then proceed towards your direction. You would have lost your 1% already. Something that you would have saved by bringing your stop loss to break even when you assessed the market. So you need to be vigilant even as you trade these markets. That way, you are going to have enough capital to trade the next move. Basically, that is it. Next, we move to beginner's readiness checklist. How do you know that you are ready now to enter the markets? Number one, you need to assess yourself and ask yourself if you know all these things. Do you understand Forex terms? For example, the SL, which is a stop loss, entry, pips, lot size, and all that. Those terms, buy, sell, break even, TP1, TP2, TP3. What do they even mean? Bearish, bullish, consolidation, all those things. You need to understand. Do I even understand what those things mean? If you do not understand those terms, you rather stay put. Keep on training your minds. Keep on training your mind until everything clicks. The market is there. The market is going nowhere. It is waiting for you. So if you are going to rush, you're going to rush and put your money on the table. It will become liquidity. You will finance the profitable traders and call Forex as come in the end. Number two, you need to know MT5 and the trading view. Why are these two important? Trading view will enable you do the analysis, the price action. And then the MT5, this is where you are going to do execution. So you can do very well analysis, but if you are not familiar with MT5, how are you going even to execute? So you need to get these things on your fingertips. After that, now you can move on to the next thing. The next thing you need to know is about PIP, lot, and leverage. What is a PIP? I explained very well on my part 1, so if maybe you have not watched the part 1, I'd request you to go back and watch it, because there is a full explanation on that. So in short, this PIP will enable you get to understand how to calculate the lot size. So you have to know the PIP that you're putting as your stop loss. So from there, you'll be able to go to myfxbook.com. From there, you can be able to calculate your lot size. After calculating your lot size, there's also something called the leverage that you need to know. Leverage, in simple terms, this is borrowed fund to magnify your position. For instance, there's a lot of different leverage being offered out there, from 1 to 30 to 1 to 1,200. This is what is being offered. So it means for every one lot size, it is going to be multiplied by the size that you're going to choose. I choose 1 to 100 to be a standard lot size. If you're a beginner and you do not know which lot size to choose from this, 1 to 100 is the best for you. Not only for you, this is what I use and this is what I recommend. Reason why I recommend this: 1, it would have multiplied your position by 100, yet keeping you on check so that you do not expose yourself too much. So think of it. Today, you might find a setup that works well. Maybe you got 1 to 3. And maybe the next 3 trades you're going to enter, they're going to lose. It happens. So think of it that you're using the 1 to 1,200 and you're going to lose, let's say, 2 trades consecutively. The damage this thing is going to do to your account, it will make you run out of the market and never come back again. So proceed with a lot of moderation. Use 1 to 100 and you will never go wrong with that. The next thing, you need also to know how to calculate risk per trade. So if you have your account and you want to risk just 1%, get to understand, out of, let's say, I'm using the 50K account. Out of this 50K account, okay, how much is 1% risk if I am going to calculate the lot size? Because without knowing how much risk you are putting into the market, sometimes you might find that you have exposed yourself way too much. You may think you got it right, but when your trade hits stop loss like this, you realize that you've lost up to 10% of your account. And then you wonder, no, I did not expect to lose 10%. I wanted to lose something small like 1%. But why is it 10%? The problem is not that the market is engineered to take you out or to make you unprofitable. No. The market will just take whatever you have put on the table. You give it too much on the table, it will just come, swallow it, and proceed, because the market does not care how you feel after you win or how you feel after you lose. It has to move. Whether you are there or not, the market has to move. So it is up to you to know how I need to calculate my lot sizes. So when it is 1%, I know exactly what is the lot size. That means 1% of my account is the only thing I'm putting on the line. Okay? The other thing is using the stop loss and take profit. Sometimes you might find an entry and you're not so sure whether this market will hold. If you find an entry, let's say you wanted to sell the market from a certain point up here, and when this market was coming up like this, it was making such moves. Eventually it got into this, and you've gone to your lower time frame and you've confirmed that it is time now to pull a trigger down. Look, before you sell this market, you need to know where to put your stop loss and where to put your take profit. Okay? Don't just say, I will just trail my stop loss and move with this market until it gets to where it wants to get to. You'll be surprised. The market keeps on breathing in and out. It will come, breathe in, breathe out. Breathe in, breathe out. Breathe in, breathe out. Okay? So maybe you're putting your stop losses here, you're following closely, and then just maybe this thing might come to take out this liquidity and tap into this zone that formed, because the zone must have liquidity. Tap here and then proceed down. And your stop loss was just here because you want to be smarter than the market. It will humble you. It will show you that you need to plan your trades and not fumble or gamble. Okay? So once you put your stop loss, put your take profit. If it is 1 to 2, take that and be satisfied. If you found that your next take profit, it would give you 1 to 3 point, let's say 2, 1, take that. Don't force this to give you 4. At least I need to get 1 to 4. Yet the market could only give you this. So by the time you are forcing this, you are exposing your stop loss. Because where you found your TP should be, that is where it should be. Not what you want to get out of the market. It is, what does the market want to give you? What has the market shown you like? Because as you put your money on the table, the market is also putting money on the table. So it's up to you to know at what point am I supposed to take out my risk from the market and bank my profits and come back again tomorrow. Remember, the market is active 5 days a week from Monday to Friday. So if Monday you did not catch a trade, wait for Tuesday. If Tuesday you didn't, wait for Wednesday. If Wednesday you never caught anything, there is Thursday. If the week ends without getting anything, it is okay. At least you have not lost money. You have your capital to trade the coming week. And that is the beauty of being disciplined. The next thing is about demo trading consistently. What does this mean? Backtest it until you see results. This is what it is meant by doing it consistently. Do not demo trade today, tomorrow you go live, the next day you want to demo trade, and then you want to go live. So you will end up mixing your emotions. You have to demo very well, know which currency behaves which way. After you have now captured that, for example, I need to trade these 3 currencies, then now you move to live account because you've seen the way they behave. They are not going to behave way differently when you go on your live account. That is how they are going to behave. So with this consistency, it would have built your entry criteria, your take profit criteria, and your stop loss criteria. You get? The other thing that most traders don't have or don't get is the trading plan. Think of trading is a journey. You want to go to America. You are a pilot. You've been given a plane. You are in the skies. For heaven's sake, you need a compass direction. So trading plan will act as your compass direction. It will tell you now the market where it is on the higher time frame, point of interest, okay, POI. So once it tells you the price is on the higher time frame, P or I, what does this mean? It tells you now, go to the lower time frame and look for entries. Okay, now it has given you the signal, the way the plane will tell you now we need to go 26 degrees east and 33 degrees west and all that. So now your trading plan will be guiding you as your compass direction so that you do not land where you are not supposed to. Okay? I hope that sinks. The next thing is about being emotionally ready. Okay? You need to gauge yourself. Am I emotionally ready to go live? I will repeat. There's something I said on my previous video, and I'm going to repeat it again and again and again until it sinks. When you are going to start your live account, you might be lucky and win some few coins in your early trades. But in the long run, the first installment that you are going to put to that trading account, it is not going to make you any profit, withdrawable profit, or you are not going to withdraw that amount of money. Chances are you are going to lose 100% of the first installment. This is harsh, but it is the bitter truth. Chances are we all want to win. Yes, I also want to win. But I started where some of you are currently. So we all have to go through this before we develop the thick skin to stay away from fake signals and to wait for the perfect setups. But how do you know that the perfect setup is gonna come? You have to make your mistakes. After you make those mistakes, you are going to learn out of those mistakes. And this is when you know now, am I ready emotionally to lose 100% of my deposit, gain nothing? My strategy works very well on demo account, but when I deposit real money, I'm losing 100%. Is Forex trading even real? We've all asked those questions when we started, but I'm here to assure you, keep learning, keep building capacity. It is worth it. In the end, you are going to see the fruits. Next, we go to the final thoughts. These are my final thoughts. Forex is not a get-rich-quick scheme. Most of you, maybe you have watched people on social media with the Lamborghinis. They are living their, best lives in Dubai. They are trading from the beach and all that. Some are trading from their bedroom, showing you they have made 1 million in the morning before the rest of us are awake. All those things are going to run through your head and wonder, am I the only one who is not seeing anything in the market? The answer is no. We have Forex traders and we have Forex influencers. So it is your work to identify, who is this person I'm following? Is he a Forex trader or this is just a Forex influencer? So that one, I am not going to go deep into that. Make your own judgment. But one thing I assure you for sure, if you see anyone with flashy stuff, they're trying to tell you, buy my signal, buy this robot, you are going to make money overnight. Don't trust them. It doesn't work like that. After all, if that thing was working for them, why would they sell it to you? They would sit in a corner, print the dollars using their systems, and not ask you for paid subscriptions to receive the bots. that they are using. Number two, success comes with education, discipline, and patience. This guy is lifting heavy weight here. He is not going to become fit by lifting this thing for one day. He has to come to the gym over and over again for him to develop that body he wants to see. Okay? Same applies to Forex. This is a profession that you want to master. There is no course out there that will take you 1 week and you are now a master, you are a professional in that field, and you can go out there and deliver. No, that is a mediocre thing. Every course that means something to anybody must take at least 6 months to 1 year. 6 months, a very short course that is. But 1 year, you can get your diploma or certificate. This means you have developed your brains towards the professionalism, towards the person you want to be. If it is about nursing, you cannot just start the nursing course today and 1 week you want to be given patients and you want to treat them. It doesn't work like that. So take Forex as that profession that you want to be associated with. You wouldn't want to go get a course of 1 week, that is a mediocre course, and you call yourself you're a Forex trader, and now you want to crash the markets. It never works like that, and it will never work like that. If you are a beginner, just know it's going to take you about 6 months to 1 year to master the market. And if you do not have a mentor, it's going to take somewhere between 2 years to 3 years to get things right. Here in between, you're going to make some few gains, but tremendous losses. Very few lucky wins, but huge losses. Why? Because you are going into the market to do trial and error. So this process of trying and doing those errors, they are going to cost you your money. So think of it. Why would you want to buy a Profam challenge instead of investing in your education? Because you need the skills for you to excel. You do not get the job and then you learn the skills. At least learn the skills and get the job. Because once you get the jobs and you do not have the skills, trust you me, you are going to be a mediocre worker. You are going to deliver mediocre outcome. So that is what happens. If you get to the market, you got that mediocre training from YouTube videos, you want to put your hard-earned money on the table with mediocre trainings, and you think you are going to make millions out of it. It is not gonna work. That is the bitter truth, but I need to tell you the truth. I'm not here to sell you hypes and all that and false hope. The thing is, invest in your education, be disciplined, and have patience above all. Eventually, these things will work for you. Thirdly, I would want you to focus on the process, not quick profits. Don't go to the market on Monday and you want to say, okay, this is Monday, I want to make $1,000 out of the market. That is wishful thinking. That thing that is ringing in your head comes from the mediocrity. That cheap lessons you received from YouTube and you thought, okay, if this influencer was entering at this fair value gap on a daily basis and they are making money, why can't I also enter this fair value gap on a daily basis and then I follow their trend, I make money? You will try, you're gonna lose and lose and lose and lose and win once. You lose 3 times, you win once. You lose 5 times, you win once. You lose 10 times until you come back to education, discipline, and patience. If you get to the market and then you realize there is no setup, why the hell do you want to chase the market? There is no setup, it means there is no trade. Simple. Wait for your setup to come. Don't care about these people who are telling you, I traded on Monday, I make this Tuesday, I made this Thursday, I made this. Those people, maybe they are making 1 to 0.5. Those quick trades. But when they lose, they are not going to show you how much they lost. They can only upload the winning things. And when they lose, they are crying alone. They sit in a corner and then lament. But come out there to show you, look, this thing works on a daily basis. Follow me for more tips. Buy this signal. Buy this robot. This robot works for me 24 hours a day. It prints money even when you are asleep. If the robot prints money while you are asleep, why the hell are they advertising the robots? They should use the robots to make them money and stop selling it. Because why do they need the money if the robot is making money for them? Okay? Start small, grow with consistency. Once now you are ready, all I need to tell you is start with a small account, grow with consistency. There is a prop firm I want to mention, but I'm not affiliated with it. It is called the Fivers. The Fivers will give you experience of an FTMO client. And the reason why I'm mentioning it, it has affordable prices. From as little as that $9, you can get a 5,000 USD prop firm account. So instead of going to buy 100K account, which will cost you somewhere between 500, okay, roughly 500 USD. Why can't you start with this small account, which will cost you $39? That $9, just that $9, you get a 5K account. Okay, 5K account, USD. I'm speaking of USD. Okay, so don't use this money to deposit to your funny broker and you want to go live. In the end, 1% of that $9 is just myopic. You're not going to make anything out of it. So this will now tell your mind, look, why can't you risk at least 10% to make something reasonable? And that particular time you're going to risk that 10%, that is the time the price is going to hit your stop loss. And then you're going to sink into depression. So this is just but a piece of advice I'm giving you. Leverage the prop firms. But before you start paying for these prop firms, use the free challenge. The FTMO will give you a free challenge. FTMO. Go to FTMO, log into the FTMO website, choose free trial. Okay? After you choose free trial, go there, select the amount. For example, start with a 10K account. 10K, okay? Don't go too far. Start with a 10K account. This small account will now help you get it real, because basically this is where you're going to start as a beginner. And then you will see how this account is going to work. Sometimes you're going to blow up this account. It happens. So if you have blown 2 or 3 accounts, you are not alone. Keep on trying. But most importantly, invest in your education. You will see how easy it's going to be when it comes to passing your Profirm challenge. Because remember, the aim is not just to pass the Profirm challenge. The aim is to pass the challenge, get funded, and make profit out of it. But if you're going to pass the challenge through guesswork, trust you me, the guesswork is not going to help you get payouts. Because you'll try, and maybe after passing your Profirm challenge, what happens thereafter? You crash it down. The reason why, think of it like a pilot who has been given a plane to fly, but the pilot had no enough skills. So once you get to the clouds, the turbulences are there, and you do not know what button to press. What happens? The plane is gonna come down crumpling. I would not want you to rush. Buy that Profirm challenge, get free signals. But now, if you are going to get those signals and they help you pass your Perform challenge, think of it this way. How are you going to sustain that Perform challenge in the long run? If I were you, I would invest heavily on my education. The amount of money that I'm going to put on the table for the market to chew, I rather put them somewhere, get education, and then now face the market with a strategy that works and with a mentor who is going to hold my hand. Get this from me. Once you get a mentor, it is going to take you 90 days to turn around things. Without a mentor, it's going to take you somewhere between 12 months and 36 months. So the choice is yours. But if you have no capital to inject into mentorship, there's no problem. Keep on learning slowly. Get a job. Accumulate the funds. If you can afford a class, pay for it. It will be worth it. That brings us to the end of part 3 in our beginner's guide to Forex trading. From here on, we will shift gears into weekly market analysis so you can start seeing how everything we have covered works in real time. If you have found this valuable, start sharing it with a friend who is also interested in trading, and make sure they subscribe. Once we hit 1,000 subscribers, I'll start hosting live trading sessions where you can copy my signals in real time. But I will only commit to those lives once we reach the number. So let's grow together and make it happen. See you in the next session.